y'all? My name is Lorraine Lindsay, affectionately known as Lolo, and you are watching Lolo's House. And today I am here with a very special guest. Not only is this man my fiance,
Look at me.
no, look at me. He's also an expert in real estate and lending. He has been a branch manager for a company called Arturo Home Loans. He's been with the company for, I think, 6 years, is it? No?
Going on 10 years, honey.
Oh.
But thanks for...
I guess we've kind of been together for 6 years and you were already with the company. Okay, so you've been with the company
Going
for...
on 10 years.
He's been with the company for 10 years, but he's been in lending for what, 13 years, I think?
13, yeah.
Okay, so he is a branch manager for his company. Just to kind of give you a little background about who he is one of the top 250 producing lenders for the NAREP. Tell me a little bit about that.
NAREP stands for National Association of Real Estate Professionals, which I'm a part of the organization. I'm actually on the board here for the Greater Las Vegas chapter, and I'm the treasurer. And every year the national office puts out a list for the top 250 real estate agents and loan originators separately, and I've been on the list many years for the top 250.
In addition to that, he has within his own company, they have something called the President's Circle, and he has, since its inception, he has been one of the, it's a very prestigious title, he's been one of in the President's Circle, which is nice for me because we get to go on fabulous trips. But I say all that to just kind of get you to understand that this is a man who's not only a branch manager, he has a team of loan officers that work underneath him in his branch, but he is somebody who knows...
Kind of knows his game a little bit. Maybe just a little.
He knows what he's talking about. So I thought it would be a great time to actually have him come on my show and talk about what's happening in the real estate market in terms of consumers. So I kind of wanted you out there to get some knowledge and some information for those of you that are actually currently homeowners and trying to figure out whether or not now is the time to refinance, or for those of you who are not homeowners but had a dream or a vision to have a home, and now with this pandemic and this economic crisis and some of us losing our jobs or being furloughed, not really knowing which direction to take in either situation. So I said, let me bring Arturo on to the show and really kind of tap into that and hopefully answer some of the questions that you guys have been asking. So I think we should just kind of like dive into it. I kind of wrote some questions down for you.
You also are missing the group that owns a home and wants to buy another home.
Oh, yeah.
We're including you two in this.
Yeah, I'm in that category too. So
Like
I'm always picking his brain, like, hey, can I buy this property? So, okay, so let's start with what I think is what's really happening right now, and that would be refinancing.
Yeah, well, a lot of people right now are taking advantage of the historically low interest rates. I mean, I've been doing this 13 years. Rates have never been this low, and they've been low before, but not like this. I get a ton. I've been doing this a long time, so I have a lot of people that bought homes with me in the past. So now they're reaching out to me for refinance, or I'm reaching out to them, and a lot of people are refinancing because rates are really good. And so for different reasons, some people are just want a lower rate. Maybe they're able to take the mortgage insurance off this time because they have enough equity. Their payment's going to drop $200, $400, $500 in situations. There's some people that want to pull some money out, maybe for reserves because of the situation, maybe because they just want to remodel their house. I have a lot of different clients doing different things. I have even a client that's lowering his term from 30 to 15. He's about 4 to 5 years into his loan now. He's going to 15. His rate's 2 point something. I don't remember off the top of my head. That he's going to get now, and his payment's going to go up $50. It's going up because obviously he's going from a 30-year to a 15-year, but he's very comfortable making that payment, and he's going to now pay his house off over 15 years, which means he's going to save thousands, hundreds of thousands.
I mean, how incredible is that? I think about that.
In interest, over the years. And
so for some of you out there, the situation that he's talking about right now, you've got someone who has a 30-year mortgage. And well, hold on, let me cheers you, honey.
Oh, cheers me. A little bit of wine to go with the conversation.
Listen, it's Lolo's house, right? It's cocktails and conversations, right?
Yeah.
So anyway, what he's saying is that you've got somebody here in a situation where they were on a 30-year fixed, and now he's like, look, interest rates are really, really ridiculously low. let me try to refinance, shave off a lot of time, 15 years, from 30 to 15, he's 26 years in. Now he's gonna cut it down to 15. And the difference in his payment is a matter of $50.
Something like that, might be less.
But,
you know, he wanted to, hold on, he wanted to actually see options. I mean, I gave him a 15-year, 20-year, a 30-year option to look at it. And obviously the 30-year, the payment went down quite a bit. But his goal was, I want to pay off my house faster and save thousands and thousands of dollars in interest. So that was his goal.
Okay.
I always start the conversation with, what is your goal? Is it to lower your payment? Is it to pull some cash out, lower your term? What is your goal? Maybe it's a combination of all three. But I need to know what you're looking to do, or maybe you want me to give you all the options, and I'll give you estimates for all of them, and you decide. And that's what I did with this individual, and he chose the one that's not going to lower his payment, but it's going to lower his term, which
So
is
the
going to
key-
save him a lot of money in the long run.
So the key then for you as a lender, the first thing you want to know is someone that comes to your office, or they call you, and they say, listen, I want to refinance. The first thing you want to know is, what is your goal?
Yes.
And when you say, what is your goal, what are some of the common goals that people have, and what would be the route that you would take with that?
Common goals are lowering your interest rate, lowering your payment, taking off the mortgage insurance, as well. Some goals are pulling cash out, if they're able to, depending on how much equity they have, or like in this case, lowering his term. He's lowering his term by quite a bit, so he's going to save a lot of money in the long run because he's paying the house off over a short amount of time. So those are the main goals people have on refinances.
So one of the things that stood out to me is, which would intrigue me, okay? So you said you have someone who wants to change their term. So the scenario you just gave is someone who says, listen, I want my mortgage paid off sooner. So it went from 30 years to 15 years, and you were able to create something for them that was unbelievable deal. It only cost them a minimal amount, and they're happy. So let's talk a little bit about the person, because I think right now, economically speaking, it might sound intriguing to someone to say, you know what, I bought a home, several years ago, a few years ago, whatnot. I have some equity, or I have a perception that I have equity in my home. And now you're telling me not only can I refinance this house, but I could actually maybe pull some cash out of my home and sit on reserves just for some peace of mind. Or maybe I want to remodel, like, I have a little bit of time on my hands and I want to kind of remodel. In that situation, how does somebody know that they're in a position to refinance and draw money from their home? How do they know that?
Okay. So I'm going to answer that question in a second. So first of all, I'm having a lot of situations where people are doing that exactly. They're doing a refinance and they're actually cashing out some money from the house, and they're still saving money for several reasons. First, because they're getting a much better rate. So if they were in the 4s, 5s, whatever, now they're in the 3s, maybe 2s, whatever it is. That is substantial savings right there. Plus, maybe now they have to have enough equity to take off the mortgage insurance that they were paying. So they might have, when they bought the house, they bought it with a 3 or 5, 3.5% down payment, whatever it was. They had a mortgage insurance. The banks will charge you that when you're not putting down 20%. So now they're able, because they have enough equity, to take off that mortgage insurance. So that's a substantial savings. So I'm having situations where people are like, let me pull out 10 or 20,000, and their payment's still going down a few $100s because they have the equity to do that mainly. So for a cash out, they're going to let you finance 80% of the value. So it's called loan to value. So I'm going to give you an example. Let's just say your house right now is worth 300,000 and you owe 200. And so you want to do a max cash out. So we're going to do a loan for 240. That's 80% of 300.
Okay.
So 240, that means you're going to pay off your loan you have now for 200. Obviously there's some closing costs. So the bank's going to, charge that, and the title fees and all. It's not just the bank, but there's mainly title and taxes and insurance. And then the rest of that, maybe it's 35, 37, whatever it is, you're going to get as cash. That's a max cash out 80%. They won't let you on FHA and conventional. You can't go over 80%. VA, I think, goes to 90%, but that's for people that were in the military. So anyhow, so this is the max you can cash out. So if you owe 90% of the value, if you owe 270 on a house that's 300, you're not gonna be able to cash out.
So let me ask you a question.
You can do a rate in term and lower your payment, very, very much so, but you can't do a cash out in those cases.
But let me ask you a question. Who determines the value? Because you're saying if you have this value in your home, who makes that determination?
Okay, so it's definitely not the internet. It's not going to be your Zillows and whatever websites or whatever. And
okay.
maybe I shouldn't have said that because I don't want to get sued. But it's going to be, us as lenders have systems we use to do an estimate of value. You know, it's comparables. They call them comps. So comparables is homes that have sold in your area, typically within a mile radius, typically within 90 days, the last 90 days, how much they've sold for, homes that are comparable to yours in size and value, size and bedrooms, bathrooms, stuff like that, lot size, all that. They make adjustments for it if it's a little different. But we're gonna get an estimate of value.
This is something that a lot of people have said to me when it comes to refinancing. I can't afford to refinance my house because they think first of all, when I purchased my home, there were all these closing costs. So refinancing, there's gonna be closing costs. So explain to people, first of all, what are the benefits of refinancing and how do the closing costs actually work? Is it as expensive as when you first purchased your home?
Okay, it's not as expensive when you first purchase a home. There's less closing costs. But there's still some lender fees. You still have to go through title again, through escrow, so there's gonna be their fees. But again, they're not as expensive as when you buy the home. So they're less. And then, you know, they always get rolled into the loan. Very few cases where there's not enough equity or something.
And what does that mean? Explain to people who don't know. What does it mean by rolling it into the loan?
So again, let me give you an example. So let's just say you owe $200,000, and we refinance your loan, and maybe the closing costs are $3,000. Just an example, okay? So now your new loan is going to be what you owe, the $200 plus the $3,000, so $203,000. But when you run the numbers, it still makes sense to do it because your payment went down $300, $400, $500, whatever it is. So yeah, there's going to be closing costs. Like I said, we have to go through escrow again. They're going to charge their fees, but everything's less, you know. And there's certain type of loans that we're doing right now at my company that we don't even charge our lender fees. But that's what I'm referring to as
when
you roll it in. So you get the new loan, and so those closing costs are included in your loan.
So that means so when you say included in your loan, so at the day that I have to sign my paperwork, if it's being rolled into the loan, more than likely, does that mean there's no out-of-pocket cost up front?
Not more than likely, pretty much every time.
Okay.
So when we set up the loan, it's so that you don't have to come out of pocket. So when you do your loan, you're not going to come out of pocket at all. It's not going to cost you anything out of pocket. And we're going to try to typically set it up for you to skip 2 payments. The month that we're refinancing, and then automatically the next month you're not paying. So your first payment is in the following month. So
okay,
example, real quick. If you're doing a refinance in July.
Just checked me.
Yeah, because she interrupts every time.
Well, I want to clarify.
Okay, well, but let me talk.
Go ahead.
So let's just say you're refinancing your house right now in July. So I'm gonna advise you, like, listen, don't do the payment. They're gonna call you maybe after the 15th, but you know it's gonna get rolled into the loan, whatever your interest is that you owe for the month. And then so you're not gonna pay this month. We're gonna pay off your loan this month, so they'll be paid. So they won't have no problems with your credit because we're gonna pay them completely off. And then in August, you never have a payment in the first month after your loan. So your first payment's gonna be in September. So you skip 2 payments on your mortgage. So if you're paying $1,500 a month, you just save $3,000 plus what we're saving you when you start paying your mortgage again in September, the $300-400, whatever it is, you know. So it's great savings all around.
So let me reiterate that. So basically, what he's saying is, if you're in a position, which we're going to get into whether or not you qualify to refinance, but if you're in a position to refinance your mortgage, especially right now with mortgage rates being at an all-time low, the potential is this. Not only do you potentially save 2 months of making a mortgage payment, the costs that are associated with refinancing your home can be rolled into the new loan, which means that at the end of the refinancing process, there is, if not nothing, very little that you're coming out of pocket.
No, usually nothing.
Usually it's nothing, is what he's saying. But even still yet, even if there's a fraction of what you have to pay, you've still saved 2 months mortgage payments. So in situations like this where there's a lot of uncertainty in the world, we're all going back to work, and now you're like, well, we're back to work now, but all this resurgence is going on, and I don't even know if, 3-4 months on the road, if you have an opportunity to refinance your home, if you can take some equity out of it, you can do that and give yourself a nest egg. And if you don't want to do that, you can say, I can skip a couple payments right now. I'm just getting back to work. The skipping of payments are really helpful. And I could possibly save a few $100s, which is substantial for a lot of people, a few $100s a month on my mortgage with this new mortgage or this new interest rate, why not do it, right? So with that in mind, that's a no-brainer to me. But what are the circumstances that people would not qualify to refinance their home? And what I mean by that is you've got a lot of people right now that are laid off, or they're in forbearance, or they've been furloughed and they're just going back to work. So for those people who own a home, what are the circumstances that you're finding right now that might cause a problem for them to actually refinance their property?
Okay, that's a great question, and it might not be the shortest answer.
That's okay.
So first
Start with
of all,
forbearance.
Okay, forbearance. So if you took a forbearance, okay, the rule right now is if you took a forbearance and continue to pay, and actually a lot of people did that. In some cases, I've had clients tell me, I never asked for the forbearance. I called, they talked to me about it, and I was like, I don't want it. They still threw it on my credit. So, but you continue to pay because you were able to, and that was the best thing you could have done.
Does it, if you do a forbearance on your credit, does it ding your credit?
No.
Okay.
No. The government, with the CARES
But
Act.
it does show on the credit.
It does show. It will show on your credit that you did a forbearance.
I don't think a lot of people know, because I didn't know that.
Yeah, so it'll show, and that's what I'm saying. I've had clients say, like, I've called the client after I ran the credit. I was like, hey, it says you had a forbearance. No, I never asked for it. They told me, they talked to me about it. They sent me some paperwork. I never filled out anything. They put me in forbearance. I go, okay. Well, did you continue making your payments? Yes, I did. Okay, then you're fine. Just call them, make sure they take you out of forbearance. We can refinance you, or if you're looking to buy a home, you can buy a home, whatever. Now, if you took a forbearance, some people needed to. A lot of people needed to because they actually did get furloughed, lost their job for temporarily, whatever it was. So if you took a forbearance, the rule is that you have to be back in repayment for 3 months. Once you're back in repayment for 3 months, you can finance again, whether you're refinancing or buying a new home.
I'm sorry to interrupt you. When you say back in payment for 3 months, does that mean that I have to make 3 consecutive payments? Or
Right.
let's say if we're in forbearance for 2-3 months and I just paid a lump sum, does that still count, or does it actually have to be 3 months?
Well, it's supposed to be 3 months, but there's a little bit of tricks to the game I've learned, so call me if that's your situation. If you're able to all of a sudden make all 3 payments, I can try to make it work for you.
Okay.
But the rule is 3 consecutive payments, let's
Okay.
just say.
Okay.
So,
Just to clarify.
Yeah, to clarify. So, that's the situation with the whole thing with COVID and people being furloughed, especially here in Las Vegas with casinos and all that. But other reasons is, sometimes, just because you qualified when you bought the home doesn't mean you qualify now. We don't know, where your credit is now compared to when you bought. The guidelines have changed. Maybe you have a lot of debt now. So it's not an automatic, like, just because you paid your mortgage all this time, that you can do a refinance either. So there's a situation. We have to look, assess the situation.
I think that's a good point for a
Yeah.
lot of people out there, is that I think sometimes the misconception is, I bought my house, and I think everyone has done this at some point maybe, but you bought your house, you qualified, you're good, and let's say now you're, loading up on Walker furniture, you gotta buy all these new appliances, you wanna do all this stuff.
You got a boat, you got an RV now.
So you're going crazy.
You went crazy.
Yeah, you went crazy. You bought your house, you qualified, you're making your mortgage payment, and now you're ready to refinance, but you've just racked up this incredible amount of debt.
Yeah.
And so now you're like thinking you're ready to refinance, and you're not sure. So this is why
It's all relative to income, though. You know what I mean? So it's all we use percentages of your gross income to qualify you. So just because you have a ton of debt doesn't mean anything if you have a great income. You know what I mean? Or vice versa. Just because you have great income doesn't mean you qualify, because you might have too much debt, or whatever. So it just depends how you've managed your income compared to your debt compared to your income. It's relative.
I think the most important thing that I would like to convey to everybody out there is that, first and foremost, don't assume anything.
Don't.
The biggest mistake, and you've told me this before, and I've actually seen this from people that I know personally, clients that I've had in the past, is that a lot of times we're in circumstances and we assume that we are either going to qualify, or most of the time we get discouraged and we think we're not going to qualify.
Yeah.
So I highly recommend that if you're in a situation where you're looking to refinance your home and or purchase, and we're going to get into the whole purchase situation.
Yeah.
It's going to be the next part. But if you're in either one of those situations, don't assume your situation. Go to a professional, go to a lender like Arturo, or a lender that you know. I'm not this is not a solicitation by any means. We're just here very passionate and we want people to be informed. But you want to go to a lender that is going to look at your situation before you do anything. So you don't touch your credit. Don't say, I got to pay this off. I got to do this. Because you would be surprised what you qualify for by not touching things, or what you might think you need to fix versus what you actually need to fix. So the first thing to do is go to a lender and say, this is what I want to do. Like he had mentioned before, what is your goal? I'm looking to refinance for XYZ, or I'm looking to buy a property. And let them look at you as a big picture. And if you're not ready, if you have the right lender, they're gonna give you the tools that you need to qualify. And you've told me stories where you've had a client have like a 400 credit score where they literally don't qualify for anything, and you're like, look, here's your situation, this is what you do, A, B, C, D, and the person follows what you told them to do verbatim, and within 4 to 6 months they're ready to buy their property. Yeah. So speak on that, if you will.
Well, that actual client was somewhat of a unique situation, because obviously 400 credit score to go into the 750, 6 months later and be able to buy. Even I was surprised, that he followed all the steps, because that's the main thing, is you have to do the follow through. I'm gonna help you. I'm gonna guide you. I'm not just gonna tell you don't qualify and move on. If somebody tells you that, the lender tells you that, go find another lender, because they're not there to help you. They're just there to do deals and move on. So you want somebody that's going to help you, because listen, if you're not going to be my client now, hopefully you're going to be my client now 6 years, a year from now. I want to be, your lender for life. So I'm gonna tell you how to get there, whether it's your credit, your income, whatever it is. But the worst thing you can do is self-assess yourself. So it's no different than if you have symptoms, some kind of symptoms, you're not feeling well. You go on Google. It's funny, I went to the doctor the other day and I said to them, I Googled this, I had a symptom about something. And they're like, oh, Dr. Google, they called it. She laughed about it. But she admitted she does it too when she works at the doctor's office. I'm like, come on, you can see the doctor every day. But anyway, the point is, you can yourself all day, but you need to go to an expert, somebody that does this for a living, right, to really see the situation. You can have all these symptoms and think you're dying, and then go to the doctor and think, oh, it's no big deal. Here you go. Here's some pills. You'll feel better tomorrow. Whatever. So the thing, it was the same with lending. Don't think, oh, I don't make enough. Oh, my credit's not good. Your credit does not always have to be perfect. And if it's not that great, I'm going to tell you what to do to get there. Any decent lender is going to tell you what to do to get there. So, or maybe your income's not enough. I'm going to say, okay, you need to work on this. Maybe you need to get a co-borrower, whatever it is. I'm always there. I'm always trying to guide you to get you there. So the thing is, they say a journey of 1,000 steps starts with the first one. So you have to take the first one, and that's, if you're looking to buy a house, unless you got a lot of cash, you're going to see a lender. So you want to see a lender first, and so they can tell you where you're at. And maybe you're ready right then on the spot. You didn't think you were. Or maybe you need to wait a little while and take some steps. But that's where you need to start.
Well, that's a great segue, actually. Because we went from talking about refinancing, and now you kind of tapped into purchasing. So here's a scenario that I see, especially right now, because I want to speak to what's happening right now in our world, here particularly in Vegas. So there are, the economy was thriving last year. At least for me, I recognize that in the casino market. I worked in the casino business, in my real estate market, in my investing market. I was thriving. And literally, and everybody can attest to this, you went from like this week, everything is like this, and literally the next week, everything was shut down.
It went sideways quick, something
very quick.
None of us have experienced.
So for those people who were in a position or ready, at least getting themselves ready to purchase a home, and now they've been laid off or furloughed, or like my situation, you're not furloughed, you're not laid off, but you work for a company that's still paying you. And yet you're like, I don't know when this is going to reopen. I don't know if I'm going to be able to go back. I don't know how long they're going to be paying me for. Or people who've gone from full-time work to part-time work, but they're ready to purchase a home because they want to take advantage of the interest rates. They want to take advantage of the fact that it's turning into a buyer's market. So I'm kind of rambling, but what I want you to touch on is, in those circumstances, if I am furloughed and back to work, if I'm laid off and back to work, or if I'm full-time, not a part-time status, what's my realistic goals here or circumstances for me to qualify?
Okay. Well, first of all, you do have to be working, because the most important thing is that you're able to pay the mortgage that you're getting. So, I had cases where people were just had got in contract right when this whole thing started, right before the casino shut down. We live in Vegas, so very dependent on employment with casinos and all that. So they got furloughed. They weren't getting paid anymore. Maybe they got paid 2 weeks and that's it, or whatever it was. So unfortunately, had to cancel that transaction. But I told them, the moment you're going back to work, give me a call, because as soon as you start back working, we're not gonna penalize you for that time for during COVID, because it's a unique situation, and we obviously know that you weren't making income, so we're gonna look at what you're making before and mainly what you're making now. Because if you're being brought back to work and maybe you're not gonna work 40 hours, maybe you'll work 32, we're gonna have to go off that 32 for now. But if you're back at work full time, 40 hours, and I just need a check or two, and we're good to go. So, and you could start that. You can start the process before you even go back to work. So I've had clients say, I'm going back Monday. I say, okay, let's do it. You know what I mean? Do you know how many hours you work? Yeah, they said full time. Okay, good. So as long as during the transaction I get those checks showing that you're back full time, or whatever the hours are that I qualified you off of, you're good to go. You know what I mean? So, this is a unique situation. Obviously, none of us have dealt with this type of pandemic or anything like that, but the guidelines are, tightening up, but they're also being reasonable about things. So, like I said, I've had a ton of clients whether refinancing or buying, that said, hey, I'm back at work now. Let's do it. Let's go forward.
So, okay, so with that in mind, so let's say I'm going to give a scenario. I'm back at work. I was thinking about buying. Now I'm ready to buy, and I'm a little bit more. I'm really more anxious to do it now than ever, because I'm back at work. Listen, the reality is, I want to get in and get a property right now, because I don't know what's going to happen 3-4 months. Right now, there's a resurgence. Now they're going to cut me off again. So let me try to get into a home right now. So my question is this: when people are in that scenario and they want to buy a house, how do you determine, or how does a person understand or get what they're going to qualify for as far as an amount that they're going to qualify for?
Okay. So, there's 3 things I like to call it CIA when you qualify for a mortgage. It's credit, income, and assets. Okay? And so your credit, one of the factors is your credit score. There is a minimum to qualify, and then, just like anything, the better your credit, the better your terms, so the better your rate and all that.
And I'm going to interject real quick. When you say credit score, please let them know it doesn't mean when they go onto these websites or whatever, and that's their credit score. Please explain that to a lot of people.
So I'll explain real quick. Sidebar, I think it is, but Credit Karma. Does everybody use Credit Karma? There's other apps. Everybody credit.
Like now, your bank will give it to you. Your credit card company will give it to you.
Everybody uses your credit card. Okay, so
how accurate is that?
It's not extremely accurate. So when I say that is because of this. So a lot of those websites they kind of estimate your credit score. They're not the actual credit scores from the bureaus, or on top of that, they're using different models. So when I say that, for example, if you go apply for a credit card, first of all they might only pull one bureau, Experian, TransUnion, Equifax, okay, and they're going to use a different algorithm for the credit card, or when you're buying a car, for example, than when you go buy a mortgage. There's different algorithms. FICO has hundreds of different models, the FICO score. So they use different models. Plus, when you're buying a house, we run all 3. TransUnion, Equifax, and Experian, they use the mid-score of the 3. When you're buying a car or a house, it's going to be less than that. So your score may not always be the same. It might be close, Hey, listen, good credit is good credit, bad credit is bad credit typically. So if it's indicating one way or another, you're probably going to be in the ballpark. But listen, I've had people come to me, Credit Karma says I have a 720. I run the credit at 660. It's a big difference. So
how relevant is your credit score?
The credit score is very relevant because, like I said, there's a minimum FICO with mortgages.
What is the minimum?
Right now, they upped it a little bit because of COVID. Most banks have tightened up. A lot of banks are like 640, 660. We're at 600. Before that, we were at 580. This is FHA loan.
So at a minimum currently, just for those that are out there, because I think there is also a misconception that you have to have like a 700 something or an 800 credit score, like it's crazy. But people can actually purchase homes with a 600 credit score, and
like I said, right now it's 600.
as of now. So this is why I say it's important for all of you to make sure that you go out and you meet with a lender. Because if your credit score is on the lower end and there's just a couple little tweaks that lender can say, they have apps and things where they can simulate your credit.
If it's gonna help you, like, listen. So this, for example, right now 600 is the minimum. So if you, let's say you're at 610, okay, you could qualify for a mortgage. That doesn't mean you're gonna get the best rate, the best terms. You're at the lower end. You gotta understand that's how credit works. You know, the better, if you got an 800 or a 750, you're gonna get a better rate than if you're at 600. And 600, no offense to anybody, it's not a great credit score, but you can still buy. But I also look at, like, hey, well, if we get your credit up 20, 30, 40 points, 100 points, whatever it is, and this little steps you can take to get it there, the rate's gonna be this much better. So I'm gonna look at that and advise you, because if it's something that's easy to do, that can get you there, why not do it? You get a better rate. I mean, we're talking about a mortgage. It's probably the biggest loan you're gonna take on in your life, the biggest purchase you're gonna have. So you might, it's sometimes it's best to do that. Some people, they don't care. They're like, whatever, I'll buy the house now how it is. I don't care. My credit score is this. I don't feel like.
Because I mean, a lot of people. Listen, we're talking about refinancing in the beginning. There are some people who say, "Listen, just get me in a home right now.
I'll refinance. I'll get my credit better, and I'll refinance down the line."
Exactly. I'll get my shit together.
Plenty of people do that.
Yeah. I mean, listen. I'm not gonna lie. I did that when I went through bankruptcy and all that stuff with my first home. I just needed to get in. I still had a bankruptcy on my credit, whatever. But I did the work, got my shit on point, and refinanced and got in much more credit. So I kind of, so there, those are those variables.
Thanks to me.
Yeah, actually he did help me out with that. So second thing, because that was C, credit. The next one was I.
That's income. So it's all relative to your gross income. If you're a gross income only when you're a W-2 employee, you get a paycheck from a company that takes taxes and all that. We go off the gross. The reason they go off the gross is because everybody has different, dependents or exceptions they claim.
Okay.
So you might claim 0, I might claim 5, whatever it is. So we can't go off
real quick
net.
Though, not to interrupt. I know you hate when I interrupt you.
You don't let me talk. You don't let me
no,
talk.
because it's important. He gets mad, but he'll get over it. Gross versus net. I only reason why I interrupt you is because even myself, and I'm a pretty smart cookie, there's a confusion with that. So explain to people what it means by gross.
Okay. Well, it's not that complicated. So.
Well, it's not, but it's confusing because you get confused.
You have a gross income. What you see on your W-2 every year, that's your gross income. So you have your check, and your check breaks it down. Your total earnings, and then it'll show your net total earnings. So you get less because you have deductions for taxes. They take taxes out, federal withholding,
or
Social Security, medical,
or
maybe you have a 401k, maybe you have different deductions, child support, whatever it is. So the net income is not what we qualify you on, because everybody's you could have two people making the same exact gross and have different nets because one has more deductions than the other. So we're going to go off gross. So gross is, what your year to date is as far as if you have a salary or if you have an hourly. So let's say your salary is $5,000 a month, or your hourly's $20 a month. $20 an hour. We're going to qualify you based on that. If you're a W-2 employee.
So just to clarify,
working for a company.
If you are a W-2 employee, this is again another misconception. People look at what their paycheck is. My paycheck is only this much money. I'm never going to qualify for a mortgage. But because maybe you're paying short-term disability, long-term disability, maybe you're paying insurance, like he said, child support, or if there's a 401k. So you have all these things.
Or you have a lot of exceptions for your,
exemptions. So you have deductions and things. So now you're thinking, okay, after all this stuff is taken out of my paycheck, I only have this much left. And your perception is that I'm only qualifying for this. So to clarify, if you are a W-2 employee, they're looking at what you make before all those deductions are taken out.
Yeah, I get
and
people
that makes
that
a
tell
big
me,
difference. So people need to understand that.
I get a lot of people that tell me, well, I take home $500 a month. Or I'm sorry, $500 a week. And I say, well, I can't go off that because your gross is $900 a week. So if I go off $500, that's not going to adequately qualify you. That's not the correct way to qualify you. You might not qualify for much if I go off that. But if I go off with the gross, which is what we go off of, that's a different story. So I always have to tell people, I need your pay stubs. I need to look at that. You know what I mean? So people.
So that's a good. So I just wanted to clarify because I think that's very important because I think people,
now this is
for W-2.
Again, we're talking W-2. If you're self-employed, If you're 1099, if you're independent contractor, it's a different story. We're gonna typically go off the last 2 years' tax returns, what you've reported, what your net income is. There's some stuff we can calculate back into your net income, but you know, at the end of the day, like some people tell me, oh, well, I get a lot. I'm self-employed. I make a lot of money, but I don't file it all on my tax returns. So listen, that's not my problem. I don't care. That's your business, what you do. But and a lot of times, and I own the business, I get it. I would put as many deductions as I can so I don't have to pay a high amount in taxes. But unfortunately, when you buy a home, that can be an issue. Can be, doesn't necessarily mean it is, you know what I mean? But your net income is we're gonna go off, not your gross. You can have $1 million in revenue and have a net of 30,000. I've seen it. So there's the 30,000 and a couple other things we can possibly add back in. Some deductions you put on your expenses, we can add back in. So, you know, but that's a talk we'll have, you know, at the time when we look at it, you know.
So
and I can coach you as to what you need to do maybe with your next tax return.
So without getting long-winded about that or to say too much information, because too much information
it's complex.
It can be complex.
I'm here to make it easy
If you have a situation where you are self-employed, and the lender is looking at a net situation, find your lender. You can, by all means, contact Arturo. He's been doing this for a long time. He's an accountant. He has had his own businesses. He's had his own properties and things like that. So he's familiar on a personal level with how that affects the next purchase and so on and so forth. So if you're in that kind of category, by all means, we'll place information there for anybody to contact Arturo, whether it's a Zoom call, whether you want to come and meet him in his office. He does have an office in Tivoli Village, so if that's in proximity to you or convenient for you, or if you just want to call him, send a message, whatever, we'll make it available for you to ask very specific questions. But what we want to do right now is give just kind of general things. Obviously,
yeah, everybody's situation is different.
Everyone's situation is different.
I can't speak specifically to your situation, but you know,
but we want to be kind of broad spectrum here,
I'm always
right?
open to answer questions, like what you say earlier about teaching. You teach, you learn.
Yeah, I always say if you teach, to teach is to learn.
Yeah, so I always feel like I learn my craft better by teaching people, by going over it. So I love, you know, it helps me, it helps you. I love giving information. I love people that go through the process. Maybe they've never bought a home before, maybe they never even thought about buying a home. And by the end of that transaction, they're like very well rounded in buying a home. That makes me feel good that you understood what you're getting into. It's the biggest purchase you're typically ever gonna make in your life. And now you understand it a lot better. You know, I'm still gonna try to make it as easy as I can for you because it's a stressful process. You know, I get stressed on my side too, but I try to make it as easy as possible for my buyer, you know, so that I don't add to their stress. I try to make it pleasant. Doesn't mean it's always gonna be, but I try my hardest to make it as easy as possible. But I also want you to be very informed. I feel that's one of my main jobs, to make sure you're very informed and I make it as easy as possible for you during the transaction.
So I think that's well put. I know there's a lot of information that we just went over, and I hope that there is some takeaway for all of you that have been listening and watching. I just want to close with this, and then I will say my piece, and then I would love for you to kind of say your thing. But listen, at the end of the day, the moral is this. Having home ownership is an American dream. It is a dream. But it is not an impossible dream, and I mean that for every and anybody. Anybody who's watching this, who's ever had a dream or a goal to own a home, you can have a home, period. If you have a job and you're making income, you can have a home. If it's not today, maybe it's tomorrow or maybe it's down the road. But the possibility, I promise you, is there. You just have to find the right professional people, the lender, the realtor, the mentors that you need to give you the proper steps to get you in process. Mm-hmm. Let me tell you the importance of owning real estate. I have worked with billionaires, millionaires, thousandaires. I've worked with people with a ton of money, and every one of those people that have had money, and self-included, you and I both, we had a great portion of our wealth into real estate. For me, I was bankrupt. I had nothing, and I did some investing, and I bought property, and I didn't think I could, and I did, and that afforded me a substantial amount of money to send my son off to college and to make other investments and things like that and give me the nest eggs that I have. So it's important and it's not impossible. And I wanted to take the time for you guys to speak with Arturo because he's incredibly passionate about what he does. Listen, the man makes tons of money and it's not about that. That's something that I
don't know about tons, but I do well.
You do well. And it's not about that, honestly. But one of the things that I always love and respect about you is that you have a passion and you care about people owning homes and having that dream and that aspiration. So I just want to say, again, if you have questions about refinancing your home or your property, call Arturo, talk to me, or reach out to your lender or your realtor. It doesn't have to be us, but reach out and ask the questions. Don't be afraid. What do you want to close and say with that?
Well, something that she was saying. So for me, I always put my customer first, my client first, because I know this is a big deal for them. I just want them to get their keys at the end of the day. So I fight tooth and nail for it sometimes. I have to go to underwriters. I have to make it happen some way, one way or another. And, and then I have people relying on me, like realtors as well and escrow officers. And my job at the end of the day is to make that transaction happen. I don't think about I'm going to make some money off this or anything like that. That just comes with the territory. As long as I'm putting my client first, I know it'll all work out. And another thing is, so the company I work for, which I love the company I work for, it's a great company, Altera Home Loans. Their motto is building wealth through home ownership. And I truly believe that a lot of people have been able to get a nest egg, get some wealth because of owning a home. When you're renting, I mean, how many people do you know that are renting that are millionaires, I guess Grant Cardone rents, but he became a millionaire before he did all that.
Something, but he owns everything.
But he owns everything.
There's
so
ownership still.
I'm just making fun of the example,
Yeah.
But ownership is where it's at. And people put their kids through college. They have an nest. My mother didn't have a career. She was a stay-at-home mom. My parents divorced, and she had to go out there and find whatever job she could. And she didn't never have a career or anything that really paid her well. But she bought a little condo at the right time, and she sold it at the right time. And this is where she has all her money from, her savings, And this is for a lot of people. This goes, people always ask me, is it a good time to buy? You know what? My answer is the best time to buy is when you're ready. That's it. Mm-hmm. Because real estate goes up and down. So maybe you buy a property and it goes down in value at some point because it goes in cycles. But if you hold it long enough, if you look at it as I'm buying this home because I want to live here and eventually I want to sell it, it'll go up again. That's just how real estate works. It's one of the only appreciating assets. You buy a car, it never appreciates, unless you got a classic car or something. Real estate appreciates. So it's a great investment at any time. I think it's still always, whenever you're ready for it, is the best time.
And I think it goes back to what is your goal? And listen, everybody for the most part has a dream to own. Mm-hmm. It just there's pride in that, and there's accomplishment in that, and it's not impossible. So we're here to help you get that goal. I do the Lolo's House for many reasons. I do it to really add value, and I feel like right now in a time like this, there's so many questions, and there's so many concerns, and there's so much we're afraid. And we don't know what to do. If you need to have a conversation with a lender, because really, truly, when you're looking to buy, like I said, I'm a realtor, I'm an investor in property, but it starts with your lender. If you're not a cash buyer, the first thing you want to do is you want to talk to someone and you want to see your position. And you start there. And again, whether you call Arturo, you ask him questions, you set up a meeting with him, or you have a lender that you've already been working with or your bank, find someone that you can trust, that is not just going to give you a yes or no answer, but it will truly give you the tools that you need. And you start there. But it's a possibility, and we're just excited to give information. So thank you for watching. We really appreciate it. And you get to kind of see my better, I won't say my better half. I'm the better half.
Whatever.
I am. Duh. But you get to see my honey, and it's not about that. I just know you just really love what you do, and you're very passionate. And so I thank you for the time that you've taken.
Thank you.
To sit and talk to everybody. Yeah. But please call us, talk to us, send us a message. How do they get a hold of you, Arturo, if they have any questions?
Well, my cell phone's on the screen, 702-806-4388, and you know, I'm pretty much always available. You know, so there's sometimes I can't answer you right away, but text me, call me. I'm more than happy to answer all your questions. Even if you never do anything with me, if you go to another lender, whatever it is, I'm more than happy to answer your questions. This is what I do, and I enjoy doing it. So, give me a call anytime.
Oh, thank you, honey.
Here goes a little bit of PDA.
Thank you, guys.